Hi, my name is Ken Krotz. I'm a real estate broker and certified short sale specialist in the Seattle King County area of the Great Northwest. I made this short video to help people who are considering loan modifications or short sales take a better look at their long-term financial outlooks and to give you some decision-making tools that should help you out immensely. So with that, let's get started. Oh, by the way, I'm not an attorney or a CPA, so nothing I'm saying here should be construed to be legal or financial advice. Here we go. The Short Sale and Loan Modification Workshop, Part 1. Now, the purpose of this workshop is to help you understand what the face of financial hardship looks like. There's a private aspect to financial hardship, and there's a public aspect. The private aspect of financial hardship starts in the home, generally long before the public ever knows that there's difficulty. Very often, long before the people that are in the hardship even realize that it's occurring. We want to show you the process and how it applies to you, to help you make a plan to deal with it, and then to provide you tools to help either do a loan modification yourself or to do a short sale to get the property sold prior to a foreclosure auction. And then we'll provide you expert advice and support along the way. Financial hardship starts in the home. It generally means that you might be turning down the thermostat, you might stop going out to dinner, you're watching your budget, and belt tightening is pretty common in this market these days. A lot of people are doing it, and it's just good financial behavior. But when you're doing it to make your mortgage payment and you have nothing left at the end of the month because of your savings or your frugality, then financial hardship might be starting to take a hold. Now, once you get to the point where you're starting to dig into your savings, your college funds, or heaven forbid, your retirement, financial hardship is at your doorstep, and you're starting to spend valuable resources and assets that you have just to keep a mortgage payment going. At the point where you really believe that you're going to be late, or you have actually missed a mortgage payment on your property, then financial hardship is gotten a grip on your life. And we need to talk about what we can do to help find financial stability for you again, and to preserve as many of the assets as you have before they get taken up by the bank due to foreclosure or sucked away in a depreciating real estate market. Once you've made missed a payment on your mortgage, the financial hardship takes on a very public aspect. The bank knows that you're late on your mortgage once you're late, and soon many other people will as well. The first notice you're going to get from the bank is called a notice of intent. It's a letter from the lender, it may be certified, saying that you're late on your payment and that you owe this much in back payments, this much in interest, this much in penalties and fees, and that you really need to make up the entire amount of the deficiency that you're short, or they may decide to take action. No less than 30 days later, you receive a notice of default. That letter says quite clearly, you are in default on the terms of your mortgage. And if you don't make up the entire amount of back payments within 30 days, we are going to take the next step to start a notice of trustee sale and to foreclose on your property. And 30 days later, sure enough, not only does the bank know that you're late on your payments, the whole world knows when they file a notice of trustee sale, which sets forth the date that the bank intends to auction your property on the courthouse steps. This is a public notice, it's available online, the whole world knows, and pretty soon your mailbox is going to be pretty full of people that are offering to help. We're wanting to get you some help here before we get to that part of the process. But don't worry, if that's already happened to you, there's still a lot we can do to help you avoid foreclosure, minimize the damage to your credit, and help set you up to buy another home in the future if that's what you decide to do. In order for me to really help guide you, there's a couple of questions we have to ask. First of all, is your hardship short-term or is it long-term? A short-term hardship is 6 months. Might be a short-term layoff, seasonal unemployment, a short-term illness, or a short-term financial hardship like a busted transmission or something on your car. The primary aspect of this is that it's it's a short term, meaning you can plan for a recovery based upon the facts that you know about the hardship. The reason we choose 6 months is because that's about how long it takes for the bank to come and take your house in a foreclosure action if you're not making payments. If your hardship is long term, it just means that it's a long term, it's a permanent disability, it's a permanent reduction of your income or a permanent increase of your expenses. It might be unemployment or underemployment for the long term. The primary aspect you need to consider in this is that there's too many variables or too many unknowns for you to make an actual financial plan to get back to financial stability and to save your assets. And that's really what we're after. Financial stability and to maintain and help you save as many of your assets as possible before they get sucked up by the real estate market or lost to the bank in a foreclosure action. Now the other thing we need to consider is the aspect and attribute of your property. Do you owe more than the property is worth in today's market? I'm not talking about last year's appraisal or the year before's purchase price. What is your property worth in today's market at a price that would cause it to sell in 30 to 45 days? That's the market value. If you owe more than that, you have negative equity. I hate to use the word equity with the word negative because there really is no equity. It means you're upside down, you owe more than the property's worth. Now if you do have equity, then we need to talk about preserving it by either doing a loan modification and helping you recover more quickly through reduced monthly payments, or by selling the property, capturing equity, putting it in a safe location while you recover from the credit hit that you take and doing a short sale, and setting yourself up with lower monthly payments through rent and being ready to buy when the market bottoms out in about 1.5 to 2 years. Now calculating the financial impact. We've got 4 variables. We've got 4 potential solutions. Short-term hardship. With a property that has equity, you're a prime candidate for a loan modification. Now I've created tips on how to negotiate with a bank. These are interviews that I've done with top negotiators, and much of what I do is manage, coach, motivate, and inspire my negotiators to do the very best that they can. Now if you have a short-term hardship and you have negative equity, you might want to consider either loan modification or short sales. There's a short sale calculator I'm going to show you momentarily that will help you make that decision. I understand pride of ownership. I love housing. I've been in it my whole life. But I want to at least open your eyes to the long-term financial impacts of holding a house with negative equity versus selling it, lowering your monthly outflow by renting, and setting yourself up to buy properties when the market's at its absolute lowest. Then there's the long term. If you have a long-term hardship and you can't make your mortgage payment for the next 6 months, alright, if you have equity, we need to talk about selling the property, capturing as much of that equity as we can before the bank late fees and past payments eat up the precious equity you have, putting it in a safe location where it's not going to get chewed up. Or if you're upside down, you have negative equity and a long-term hardship, we need to talk about short selling property and minimizing the damage to your credit, avoiding the foreclosure, and again, getting you ready to be set up to buy a property when the market bottoms out in just a couple of years. That'll wrap up this video since we're getting close to our time limit, but the next video is going to go through the demonstration of the short sale calculator. It's something I'd like to make available to you for you to use. And it'll be very brief, and I'll look forward to seeing you then.